Let's go to the Pakistani city of Lahore and speak to Osama Rizvi, an energy and economic analyst at Primary Vision. Great to see you, Osama. Look, apparently during Donald Trump's first term as president, there is a clock in Times Square. I'm sure you've seen it, showing the US national debt. Some of the numbers go so quickly you can't actually visually see them changing. And Trump said, I don't care about the national debt. I'll be dead by the time it's a problem. How problematic is that attitude?
Well, a lot, I would say. And right now, during his lifetime and during his presidency, we are seeing that the cost of servicing national debt, actually, that is also very important. That is now the third largest expenditure for the US after Social Security and Medicare. From 2020 until now, the cost of servicing the debt has increased 3 times, has tripled essentially. And in the last 12 months, it has now touched $1.4 trillion. And I've said this on ad nauseum basis that if you want to look, if we want to find out when will the war end, if it will, then the answer lies in the bond markets, as you mentioned in the introduction. But there is another thing that the current administration can totally ignore these concerns and maybe think that this will just fizzle out, which it will not essentially. But the bond markets, treasury yields, and this debt, all of these issues are aligned, interconnected. And this is where the answer lies for what happens next in the Gulf.
Do you expect inflation to pretty much rise all over the world? The rising energy prices, also possibly the rising food prices, which we've been seeing, especially because of the Ukraine-Russia war. Those two things put together, does that mean inflation will undoubtedly rise?
Well, there have been a lot of reports on this as well. When we talk about the food prices or food price index, interestingly and fortunately, the actual impact, the real world impact has not been as drastic as was being portrayed. So that is a good news. But I do not mean that this cannot get bad. This can exacerbate if hostilities continue, especially in Ukraine and area around surrounding Black Sea. In terms of overall inflation, yes, there has been an impact, but increase in productivity has sort of put a brake on that. Right now, US inflation is at 3%, 3.4%, above 2% target. We are seeing the same across Asian economies as well. So yes, there is a specter of inflation that can become unmanageable. But as they say, you have to shoot the inflation between the head before it raises its ugly head. So I think we're past that point, and we're looking at, and I've said this before, we're looking at a global monetary policy regime change, and once again, we are going to live in an era of higher interest rates.
Osama, what about the AI industry, and especially the level of borrowing in the private sector for tech and AI? I mean, it's so debt-laden. What about the likelihood of a crash?
That remains a big possibility. And I think that's not even a secret. Everyone knows that. We also know not only that this AI industry is debt-laden, there is not much of a profit that many of the big firms that promised a lot of stuff has made until right now. So NVIDIA, I mean, there are only a few players at the top. And if one of the players just go bankrupt, or even there is a news as such, the whole AI chain can collapse. Will that happen? I don't know. If you ask me, I mean, if you ask me regarding the trigger, the next trigger, I am looking at Japan essentially, and what is happening in Japan in terms of increasing interest rates, in terms of the threats of an unwinding of the carry trades, trillions of dollars, and Japanese treasury yields. So I think that is a more important pain point when you talk about a global recession.
Osama Rizvi, thank you so much indeed. Really appreciate it.